Whoa. It's Friday. What's Friday mean, Robin? It's
the end of the week.
Forest Day. You're terrible. That's why my color's green today. Green like the forest, green like I'm hoping the charts turn green. What's going on, everyone? Happy Friday and welcome back to Sin City Crypto Live. I am one of your hosts, David, and today we're coming at you from our studio here in the heart of the losing Las Vegas Raiders, Las Vegas, Nevada, with our daily, only on the weekends, weekdays live show. Before we get into the content, quick disclaimer, nothing that anyone says on this channel should be taken as strict financial advice. So please, as always, DYOR, do your own research. Speaking of content, today, we have our main man, Forrest, joining us in T-minus 10 minutes to talk about all things markets, Ethereum, Bitcoin. I'm probably going to ask him what he is investing in and what trades he's got. Also, if you're a Cosmos fan, you're going to want to stay tuned. Some exciting things happening in the Cosmos ecosystem. Can this boost Cosmos into the top 10? We'll get our take and Forrest's take on it as well. And JP Morgan Chase is at it again, says they have doubts about Ethereum post-merge. Just when we thought Ethereum was going to gain institutional traction, one of the biggest banks comes out against it. We'll cover that and much, much more. But before we can cover that and much, much more, I'd like to introduce you to your other co-host, Big Rob. What's up?
Hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, the stale information, and we make it sexier.
Talking about this. I love your shirt.
Oh, yeah.
Oh, yeah, it's a good-looking shirt, man.
Yeah, look at that guy.
Hi, my name is David. I'm
Crazy.
That's
Well, did I
fine.
get a voice?
No.
Did I get a voice box?
Hold on.
Stop it.
All right, guys. Hi. The markets are going to flip, and Bitcoin is going to be completely uncorrelated from the NASDAQ, and then China and the U.S. is going to get into crypto, complete correlation, breakdown. Indonesia is going to have...
two of them. I can handle two of them now.
You know what's funny? I was going
David
to wear
is
my
so
Robin shirt
mad.
today. I'm not mad.
Way. That would be
I'm green,
fun.
baby. I'm green. I have a shitty desk. You just messed up your whole intro, bro. Good job.
Yeah.
That might have been worth it, though.
We don't just do deep dives. We don't just do live streams. We also do deep dives. We have a pretty amazing street interview video. At least that's what I think.
I have a pretty amazing desk.
And we also do afternoon videos and shorts and
Longs and
longs,
calls and puts.
calls,
And
puts,
bonds.
ponds.
Wait.
And we got this badass like sign too.
Robin brought it back to life.
Yeah, we had a toddler in here. He just tore this thing up yesterday, bro. I was like, what happened to my like sign, bro? Anyways, little Gorilla Glue, and she's back, baby. Do me a favor, hit this damn like button. Let me see.
Where is hit the like button?
Let's see here. We're at 20 likes. Where's everybody at? There's only 25 people in here.
Yeah, bro.
What happens to the days of getting 100 viewers, man?
Those days are gone, buddy.
Those days gone.
Those days are over. I hope
Those-
not. I hope not. They're over. I hope they're
Somebody
not.
liked the thumbnail, by the way.
Oh, you guys like the thumbnail?
Yeah.
That's a good one.
If you ever saw before, it was finished.
The funny thing was I was making the thumbnail and David happened to look over, but I had just superposed his head not in the right spot yet. So it was just like sitting on top of the bear. He's like, why is Putin riding a picture? Why is Putin riding a bear-headed David? And I was like, oh, that's not where it's gonna go. But that's actually would have been a better
I'm pretty
thumbnail.
jacked, though.
The better thumbnail would have been Vladimir Putin riding a bear with your face on it. Would have been good. Markets are dumping, bro.
Are they?
Nasdaq's down
But
like
are they?
2.5%.
Oh, yeah. The traditional markets are down.
The S&P 500 is down 5% for the week, bro. That's all a big percentage. So
Huge. As Donald Trump would say, that's huge.
it's huge.
Huge.
All right. And speaking of hit the like button, he's here.
What's up, HTL? Hit the like.
So let's get into the roll call. All right. So first up in the chat today, we got Destroyer. Round of applause for Destroyer. Man,
I thought Robert Salazar was the first one.
I think this might be the first time Destroyer is first in the chats.
He's been destroying.
That's right. Now we also got Blake, Why You Loud Gang, Strictly Sports, Roki Yoshi, Redman Talks. We got Moby Sage, Big Swole, Marky Mark. We got Big Chili Willie, Noel. Oh, Noel. And then we got Nordy, AZ, Robert Salazar, and then Handy, B Chad, K Factor, My True Love, and then Atomic Atom, Tox, HP. I think I already said all that. Bullish Kenny G's in here. Welcome.
My number one hater.
Yes, your number one hater.
Love you, Kenny.
And Shizzy. And hit the like button. Sean Burns. Ding Dong Daddy. And rounds it out. So welcome, guys.
Welcome.
There you go.
Robin.
And Jimmy, I forgot. There we go.
Robin.
Okay,
you
boss.
know, we talk about a lot on the show. We talk about traditional markets because it ties into, cryptocurrency. And how many times have we talked about inflation, right? They quadruple the money supply. We're in monetary tightening policy. Do you think it would be now is a good time to print more money? Do you think now is a good time to be handing out more freebies?
Here's a better question. Are they ever going to stop printing money? Are they ever going to stop?
No, but I'm saying like right now, like, do you think it's a good time to be issuing freebie checks to everyone? Inflation help.
Well,
checks?
I'm actually glad you asked that question because, well, what do you know? I have an article on that.
What?
So California reveals when inflation relief checks will be sent out.
California, they don't do anything stupid.
No, they're all reasonable and progressive here.
Wow.
Now, in case you didn't know, after months of anticipation, Californians will soon be receiving the middle class tax refund, also called the inflation relief. More like politician disbelief.
More like politician trying to get reelected.
So, do you think politicians have any idea on how money works?
I'm just bro. Literally, okay, I am not a politician. I don't have a PhD in macroeconomics. I understand enough to confidently talk about it. I study it. But exactly, printing money for inflation relief. Literally an oxymoron, a parrot.
Dude, here's the thing.
Go ahead.
It would be like Bitcoin airdropping 5 million tokens to compensate for the drop in price of Bitcoin. Like, hey guys, we know Bitcoin's down, so we're gonna print 5 million Bitcoin and airdrop it to you guys because we know you're hurting. You'd be like, actually, a terrible
Isn't the
idea.
whole point for people to feel the pain, right? The whole point of tightening the economy is to get people to spend less money and to get people to borrow less money. And so you messed up during the no, seriously, you messed up.
It is. It just makes so much sense when you say it.
You messed up during the pandemic when you issued people money and they couldn't spend it anywhere. You're messing up now.
Hey, Forrest, can you hear me?
Like, what are you guys doing, man?
Hey, how are you, man?
What do you like?
Good.
I don't know. I thought it was pretty common sense.
Random?
These people, they've gone to all these Ivy League schools, PhDs, master's degrees, smart as hell, hang around all the smart people, and they continue to make dumb decision after dumb decision. And what? How much was that? $200 to $1,200, or $200 to $2,000?
Oh, you can hear them?
Let's see here.
There was a number in there.
It was
like
$200 to $1,050.
What in the actual F is $200 going to get you in California? Half a tank of gas?
$200. Oh, you were talking live?
Rocco was live?
That's nice. Little extra Rocco. All right.
Damn you, Rocco.
So
It said Rocco, shh. It said Rocco, shh. Rocco, mute yourself. He did. He's muted. He's muted from our lives. Anyways, yeah, guys, this is why we can't even trust them to fix inflation, let alone trust them to come up with regulation with cryptocurrency. Definitely not. Yeah. You got. I mean, first of all, you're not. Are you surprised?
That California decided to print money as a way to fix inflation?
Yes.
It's
I mean, it's comical, but not surprising.
Not surprised at all.
Yeah. Great.
What's next? They're gonna
they're
gonna cut down trees to prevent
forest fires.
Yeah.
Guys, there's no trees, not gonna be any fires.
Like, it's logical here, man, right?
Oh man. So XRP was
Dude, straight
pumping,
ripping, dude.
Do you think we're gonna get a resolution by the end of the year? Not a settlement,
hold on,
like
a New Year's resolution?
Dude, I'm telling you, bro. You know, I ran a poll on Tweeters, and I said, if the XRP, if Ripple wins the lawsuit, can that essentially bring a meaningful bull rally? And let's see, out of 49 votes, 38.8% of people said yes. 24.5% said hell yes. So a little over 60 people said yes, that XRP, a win against the SEC, would be enough to kick off a serious bull rally for all of crypto. Robin, where would you vote if you were to cast your vote?
No.
I'm not saying bull market, okay, but a significant bull rally. I'm talking Bitcoin at 30.
Bull rally.
Bitcoin at 30K, XRP to $1.20, like you mentioned, ETH to 2,000.
Maybe a two-week pump.
Okay.
3 at most.
Okay. What do you guys think? If you haven't voted, go vote.
I think you get initial 3x off of Ripple. I mean, XRP. I would say would probably 3x.
So
then it would pull back. Yeah, I'd say $1.50. Probably pull back to $1, and then it would probably take off again. And I think $2 to $3 would be
guys,
realistic.
This is for XRP, and I was reading an article. The amount of money they have spent, it's into hundreds of millions. And it's not just for Ripple. Guys, what I want you to understand is the implications this win against the SEC, if they do win, which I think they will, the implications it has not just for Ripple and XRP, but for the entire crypto community. These guys are literally spending hundreds of millions of dollars to essentially secure the future of crypto regulation in some sense. So even if you're an XRP hater, you should be rooting for them to win. This will set precedents in the entire cryptocurrency markets. With that being said, I'd like to bring on our favorite guest, Mr. Forrest. Bring him on. Forrest. What's up, bro?
What's up?
Hey, how's it going?
How you doing, man?
Doing well. Thanks for having me on as usual.
Hey, thanks for coming on, as usual. Do you like Robin? Sure, Robin, stand up.
Ah, nice. Yeah, it's very cool.
If I bought you one, would you wear it?
I'd rock one.
Hell yeah.
Yeah,
All right,
definitely.
Forrest, I'm gonna need your address. I'm gonna send you one of me and Robin, and we'll ask you to wear one, and we'll see which one you pick. Then we'll really know who your favorite is. So, just kidding,
Well,
man.
you know, I think it might be a little easier in eyes. You know what I'm saying?
Yeah. So, Forrest, XRP has been pumping. I think it's up close to 70% over the last week, I believe. I could be wrong. Is it just speculation that they're going to win the case? Is it something else that you've maybe found? Is it, I don't know, who's the guy, Jed McCaleb, who finally offloaded all his XRP? Is it because part of it, that sell pressure's gone?
Yeah,
What
I
are
forgot
your,
about that.
What are your
that
thoughts?
was not too long ago.
Yeah, about a month ago.
Yeah, I mean, probably all of those things. I haven't come across anything in particular. Usually when these things pump beforehand, it's because, probably somebody knows something. And that's just starting to spread, and maybe you're getting large, whale accumulation. I have heard the term XRP whale accumulation thrown around in headlines recently. So
Yep.
maybe some people know some stuff that there's going to be a positive outcome to this case. But yeah, I mean, we're still haven't broken the downtrend line, so I'm actually looking for a little short on XRP if we can hit some key resistance. I think 62 cents. We're currently at 47 cents. 62 cents would be an attractive resistance level. If we break through 62 cents, I'll flip long. I'll say, send it to the moon if we break through 62 cents.
So 62
but I do think there's a little bit of a
so that's your number. If we break above and stay above and make support on top, you're going long?
Yeah, I'd flip long in that case. Then it's it's looking strong, probably going to break out upwards. Otherwise, this is very similar to previous pumps that we've seen in XRP, where they just kind of run into a brick wall at that downtrend resistance level. So I want to take advantage of any opportunities that I can where you have a volatility within crypto. And look, it's nothing against XRP. It's just if something's pumping super hard, up 70% a week in a bear market. Yeah. There's opportunities because it's tough to get that follow through in a bear market.
Absolutely. And when you're able to take your emotion out of it and just look at price action and charts, I mean, you're going to make good decisions. Now, we want to talk about the video we aired on Monday, your ETH video. But first, I want to talk about, Jamie Dimon, CEO of JP Morgan Chase, came out and said Bitcoin and a lot of coins are decentralized Ponzi schemes. He said that during a hearing yesterday or 2 days ago. And then today, JP Morgan Chase talked about they're voicing doubt over ETH. This is sourced from Finbold. They have published a research note with a list of all the potential problems with ETH after the merge. Number one being the divisions in the Ethereum community, talking about some people are staying back and mining the ETHW token and some are leaving for proof of stake. Talks about decreased decentralization. So it's becoming more centralized, which is what you were talking about during your video, and we'll cover that too. And then also a noted price decline. The recent sharp drop it had from about $1,700 down to $1,200 to $1,300. Now, Forrest, kind of give us your thoughts on what they're talking about here, and then what as far as your video, has anything changed since then? Are you surprised at the price action of ETH? So, you want to start us off?
Yeah, so those points are so ridiculous. And I think JP Morgan has a history of bad-mouthing Bitcoin. And then I think in the bull market, they hopped on the narrative with, I saw, plenty of JP Morgan articles that were like, Bitcoin's going to 200K.
Yes.
So at the end of the day, you're probably going to see them FUD Ethereum, FUD Bitcoin, scoop some up in a bear market, and turn around and sell it to their customers at a higher price. Even if they don't do that and they're just bad mouthing it, it's really just because of probably competition. It's sucking money away from their products. Crypto is, in my opinion, a real threat to the legacy financial system, which JP Morgan is a part of. So it does them, they get more benefit from FUDding crypto than they do from supporting it right now. If they FUD it, they can, potentially pick it up cheap and sell it to their customers at a higher price in a bull market. Later on, or if they just FUD it, it slows down the growth of cryptocurrency, and it's less threat that they have to worry about in the future. So always trying to understand what are people's incentives. What they're not necessarily, people aren't necessarily honest. Oftentimes they're very biased based on what they're what they're invested in and what's going to make them the most money. And yeah. So, those 3 points, especially the last one, silly, like quoted the recent price decline as a concern. It's like, have you seen the S&P 500?
Seriously,
have you seen oil? Like, I guess
gold,
like nobody
gold
should,
is down. Gold is at a 2-year low right now.
Don't tell Peter Schiff that.
Yeah, everything but the dollar. Everything but the dollar is absolutely crashing right now.
Yeah, for me, I agree with you. Excuse me. The last statement for the sharp price drop, like, they're like, oh, it was a buy the rumor, sell the news event. Well, duh. Like, everything is. And so
you can make the argument with the centralization. Like, I could see how that narrative could build.
But wouldn't that be a positive for a financial institution like
here's
Chase?
The thing. Here's the thing. The argument, realistically, you don't know if it's going to be more decentralized or more centralized. You can't really make an intelligent prognosis until it actually
Settles in.
Yeah, it settles in, and you look forward. That's the thing. It's like we don't know yet. It could very well, Vitalik has been very vocal. He said over and over again it's going to become more decentralized because you're going to have the stake pools are going to be spread out, and that they're going to be like capped out to a certain amount. So it's not like one wallet can just control everything. It has a diversification like built into it, and so on paper it's supposed to be more decentralized. And I know you can say, and I know at the end of the day you can make the argument like, hey, you can just buy up more nodes, and there's nothing stopping one company from diversifying into different pools, but supposedly it's supposed to be more decentralized. So I just don't think you can come up to the conclusion, have a press release, or be in front of Congress and make these bold statements when it just literally flipped 3 days ago,
Right?
Or last week. But
and speaking of
100%. I mean, the groundwork and the
Forrest.
framework is there for ETH to become more decentralized. It's also in everybody who operates on the Ethereum blockchain and owns ETH. It's in their best interest to spread out the staking pools to decentralize Ethereum further. So, yeah, it's a slight concern for me, but not much more than that. It's it's in everybody's best. If you look at where's people's incentives. Well, people that own Ethereum and stake their Ethereum, it's within their incentives to decentralize the network by choosing validators that are in less control. It's just a unfortunate temporary result of the current circumstances that you cannot withdraw your staked Ethereum from the. There's no withdrawal contract yet. So once it's staked until they write the code for withdrawing Ethereum, which is just making Lido and Coinbase, their liquid staking products, very, very popular because then you can actually trade your staked Ethereum. But once withdrawals occur, and once you can withdraw your ETH, that should rapidly decentralize the network.
Okay. Now, Forrest, Ian Bellina, and I'm not going to ask you to comment on the lawsuit. So he got a lawsuit was filed by the SEC. Obviously, the whole thing with the pumping and dumping, obviously it's safe to say that's not something we condone. What I want your opinion on is in the lawsuit, they came to the conclusion that those tokens were issued in the U.S. because, quote, a majority cluster of the Ethereum nodes are in the U.S. Is that a stretch, or do they kind of have a point in saying, hey, because a lot of these transactions, these nodes, they validate the transactions, a lot of them are clustered in the U.S., it's now in our jurisdiction?
I think that's a stretch. I've read some really good analogies, and I'm blanking on them right now. But yeah, that's. I think that's a stretch. So at what percent? At what percent do you say the transactions are? What's the precise threshold of validators that you need in the U.S. to declare that those transactions are taking place and occurring in the U.S.? Yeah, I see that as a stretch. And the other thing is there's no precedent or policy in place that stated that. Now, if they had policy in place that said, hey, if over, and this was, policy that was backed and in place beforehand, and they said, if over 33% or if over X percent of the validators for transactions on Ethereum are in the US, we are going to classify those as US-based transactions. But when you have no policy set in place beforehand, then you just try to go back in time to go get somebody and say, hey, gotcha, you were operating in the US on Ethereum, even though we just made up this rule on the fly. You can't do that. Right. I think the SEC is grasping at straws, and I think they really just need to be focusing on setting a precedent for policy rather than just trying to go after people. Because ultimately, and what we're seeing with XRP right now, and what I think we would see if the SEC came after Ethereum, and ultimately what I think is going to come of the lawsuit with Ian Bellina, is I think the SEC is going to fail because they don't have the backbone of structured, precedented policy in place, and it's really hard to say, go back in time and try to apply securities rules to something that's totally different. and doesn't have policy set forth for it already. They need to go and write and structure cryptocurrency-based product or blockchain-based policy, which they've had more than ample opportunity to do. They could have been doing that all year long, for the last 2 to 3 years, and they just haven't been doing it. So until they start doing that, I think we're going to see the SEC lose case after case after case.
Yeah, and I think it goes without saying that obviously I feel like I speak for all of us. We're not for pump and dumping and scam and stuff like that. So it's just that part of the lawsuit kind of drew my attention. And now because the majority of the hash rate of Bitcoin is in the U.S., Bitcoin is now a U.S. company. Like, where does this stop, right?
I don't know. I think a lot of comparisons can be drawn to real world situations. So I know I brought up yesterday, I'm like, hey, what's to say that my transactions aren't occurring here in the States if, say, I'm using Alibaba or an overseas website and the servers happen to be Amazon Web Services, and I'm using servers in the New York City area or in Seattle, for example. I mean, at what point do you stop? Like, at the end of the day, the internet itself, it's not about where you're logging in at, it doesn't really matter where the server is based at or where the consensus happens to fall that day. I mean, at the end of the day, the internet doesn't have borders, and the internet is international. It's not, there's no jurisdiction on internet. I mean,
it's
I get it. You have IP addresses and they're regional and things of that nature. So I understand that you can identify places that things occur on at the internet, but it's still not. It's not a place with borders, man, and that's what confuses me. And I just feel like the SEC, as you mentioned, is just going out here like I feel like they're just. I think they went after Ian because he's probably going to have a harder time defending himself than a large company, and so I think they're just trying to set something up that's maybe they're like, hey, let's try something new here. Let's see if we can get some dirt on these other chains. Start with somebody a little smaller, and we'll go from there. I mean, that's what I mean. And maybe that's a little conspiracy theory in my head, but I don't know, man. I mean, I feel like they could have pushed that same exact narrative on a lot of big billion-dollar valuation blockchains out here, and yet they didn't. And I don't see how this individual is any different than some other chains as ICO. I mean, honestly, it's not fundamentally different.
For me, I think we're gonna need Congress to step in and draw the line, because if not, the SEC is gonna continue to go rogue and assume everything's under their jurisdiction except Bitcoin. And next thing you know, we'll start hearing all these blockchain companies have to come in and register with the SEC. Wouldn't be surprised. Now, Forrest, so this is all part of our biggest news, and a couple of them kind of stood out that I wanted to go over with you on the show. So there's one more I wanted to talk about, and it's Cosmos. They're releasing Atom 2.0 September 26th. So in 3 days, this is sourced from BN Crypto. Now, this new token has a potential to fix their inflationary tokenomics. It also comes with interchain security, which would allow Cosmos to share its security with other blockchains. Cosmos validators will have the ability to validate other blockchains, and other projects can be secured by staked atoms. Now, I know you're a big tokenomics guy. Their inflation, I believe, was anywhere between 7 to 20% with the original Atom token. How big of an impact can this have on the price of Cosmos if other projects would now be offered more security by staking Atom token, which usually they wouldn't have to? Will this, I mean, what kind of, you want to just share your overall thoughts and maybe kind of pinpoint an answer to that question?
Yeah, so I haven't done a dive on Cosmos 2.0's tokenomics, so I don't know if it's going to be deflationary. I don't know what the actual model is going to be. I'll take a note to actually go and research that. I would imagine this is similar to why Ethereum was pumping before the merge. This is probably similar to why Cosmos has been performing so well.
Right.
Anytime you're going to reduce the production rate or issuance of anything, any asset, gold, crypto, literally anything, supply and demand dictates that you're going to see price appreciation, assuming constant demand. Right. Obviously, demand's getting crushed right now, but in the long term, this makes. And again, I don't know the specifics about the tokenomics, but this makes Cosmos immediately more attractive, just because they're reducing the issuance rate, or at least I'm assuming they're reducing the inflation rate. So I'm a big fan of cryptocurrencies that have tokenomics that are deflationary or experience reductions in issuance. And I think right now Ethereum's tokenomics are kind of setting the precedent. And this is something I put out in a tweet thread a while ago that. One of my biggest predictions for narratives that we're going to see is the adjusting and the fixing of tokenomics to add burn mechanisms and become more deflationary or at least less inflationary. I think we're going to see a lot of cryptocurrencies doing this, like Cosmos is, to fix the inflationary pressures. Because at the end of the day, people want the tokens. In order to invest in the tokens, people want those tokens to accrue value. And if those tokens are just inflating and there's too much issuance and the price of those tokens are going down, people don't like that, and it doesn't make for an attractive investment. And you can have the best technology and the best chain in the world, but if your token price is constantly decreasing in price due to high inflation, it's not going to attract a lot of investors or market participants to come in and stake those tokens and secure the network. So I do think we're going to see a lot more of this in the future from many different cryptocurrencies, especially layer ones.
Yeah, and as far as like inner, like not talking about bridges, but as far as interoperability, I feel like Cosmos, I would say is it safe to say they're the gold standard? Like no hacks, no issues, pretty reliable, efficient, fast, right?
They've been around for a while. That's my thing is that they have the tenure. They've been around for quite some time. At least
since 2013, 2014 was when Tendermint was,
right.
Which is their consensus mechanism, or consensus model, I believe. I could be butchering that, but like 2014 or so. They've been around for a while.
So it's got
at least
longevity
they've,
behind it.
Yeah, I'm not necessarily the token, but the people that have been working on this have been around in the space for a long time. The Cosmos is really, really great. Really started to, in terms of bullishness and outlook, they've really started to surpass Polkadot, which is kind of the big comparison or competitor to them. But yeah, blockchain interoperability is going to be a big narrative, and there's going to be a lot of demand for it.
There was a lot of people expecting this giant rally from Cosmos in the last the last bull market. So that the 2020 to 2022
got up to like $50.
It got up to 40. I'm looking at the chart right now. So 40. It peaked at 45, but realistically, it was around 30. $35 was kind of like the high there, with the exception of like a 1 week pump. But going into the market, I mean, $2, that was 2019. So I feel like it was, in comparison to some of the other big gainers in the top 50, Cardano, Solana, Binance, I think they all outperformed Cosmos in a comparison regard there. So I think a lot of people were just kind of writing it off. I think this is probably lining up to be one of the biggest. Where are they at? They're like top 20. Yeah. Right at 20. I think it's going to be one of the biggest plays in the top 20 for the next bull run for myself. I think they're going to outperform. I mean, it might be difficult to outperform Polygon, but I think everything else, Solana, they'll probably outperform Cardano, honestly. I think and maybe Avalanche would give them a run for their money, but real big on the next bull run with Cosmos.
Yeah, especially if they change their tokenomics. I mean, essentially, They went from $2 to like $35. It's really difficult, even in a bull market, when you have up to 20% inflation. And this is the problem that Polkadot ran into. And I was a big Polkadot fan at the beginning of the bull market because blockchain interoperability was such a kind of a new narrative at the time. But Polkadot also had really, really high inflation. I think up to like 14%. So even when you're in a bull, if you have 14 to 20% inflation rate year over year, you're really, really hurting your token value. And if Cosmos can fix that and start value accrual to their token, that makes it a potential serious player.
So as is, without changing tokenomics, are you more bullish on Polkadot or Cosmos in the next bull market?
Right now, Cosmos has control of the narrative. I think the issue recently with Polkadot has been the cost to become a parachain on Polkadot network. It's just that there's potentially some other, you have competitors in the space, and if it doesn't cost that much to move on to Cosmos, why would you pay to be a parachain on Dot? It's just too expensive. So I think that's been the real big issue. Now, Dot, in terms of market cap, I believe is larger. But you have to understand that a lot of that's due to token inflation. There's more tokens coming out, so lower price can stay stagnant, and market cap can still increase if the net issuance is positive.
Okay. Cool. All right, Forrest, we are sending it to you, my friend. Do your thing.
Cool. Yeah, I'll do a little market update here. Hopefully you guys can see my screen here. It's ugly today. The S&P 500 this weekly candle has been down about 6.15% for the S&P 500, which is really bad. That's about as bad as it gets, short of a really bad pandemic flash crash or just a complete destruction of the market. This is one of the worst weeks we've seen out of the S&P 500 in quite a while. Now, if we zoom in a little bit here now to the daily, we are going to see that we're in a bit of a demand zone. What I mean by demand zone is historically we've seen buyers come in here. And I will say, if you look historically on the S&P 500, S&P 500 does have a tendency and likes to double bottom. And it's never, 100% perfect. Sometimes you find support above the last bottom or a little bit below it. But there are lots of examples of the S&P 500 on the daily and weekly double bottoming. If you see, here's literally one right there, a little double bottom and then a continuation. So if we do find support here, that would be great. We could potentially come back up and test this trend line. But the issue is global macro doesn't really have any bullish catalysts for a little while. Like right now, the market did not like what Jerome Powell had to say about the FOMC in the FOMC meeting. Did not like their adjusted projections. Now we did get the 75 basis point hike, which was relatively priced in and expected. But I think what wasn't priced in was the bearishness of the projections, the new projections from the Fed. Meaning they've set forth a plan, a more rigorous plan. They've increased their projections for how high they expect to be have to increase rates. They've increased their unemployment projections, among other projections that are more indicative of not a soft landing. And I would say at this point in time, right, if we break these lows, this is really no longer what I would consider a soft landing potential, especially when we're already down 24%. We go down much more than 24, 25%. Really not much of a soft landing to be had there. Now, the next support level, if we really start crashing off, and I think one of the biggest threats in the short term would be a move down to this like $3,200, $3,300 level, which is our next big demand zone. And I'm not the biggest fan of this indicator right here, but oftentimes it can be helpful. And this is just shows you essentially the amount of volume that's at certain levels. And oftentimes when you have these gaps here, you get violent price action, right? So we have a lot of volume up here, and we have a lot of volume down here. And we kind of have this gap where we're approaching right now. And that can be cause for concern. That can cause a violent move down to, a support region where you have more volume. So that's something to keep in mind. And again, this is the scenario of this expanding descending wedge that we've been talking about for a while, where we've talked about, hey, you want to have money to buy down here. This is not an ideal situation, and to be quite honest, I hope we do put in a double bottom and start moving back upwards. But depending on how bad some stuff in the economy starts to unravel, it's unclear what's going to happen, right? So we've got a lot of stuff going on. We have DXY being, between DXY and bond yields, they're about the only things that are up right now. So DXY is just the strength of the dollar. The dollar is eating every other country's currency for lunch, particularly the Japanese yen and the euro. We have bond yields spiking, the 2-year up to 4.199%. That means the price of bonds is decreasing. The yields are increasing because people are basically selling bonds. They're not attractive investments right now. And then we've recently seen the 10-year put in new highs. And bonds are very complicated. I'm by no means an expert, but usually the 2-year needs to be, and we talked about this on the last week's live stream on Friday, where the yield curve has inverted. Right, and that usually precedes a recession. It's usually a signal that there's a recession coming. With S&P 500 down 24% and two quarters of negative GDP, you could say we're already in a recession. Some people will argue that we're not yet. Regardless, I mean we're well on our way. So the 2-year is actually a higher yield right now than the 10-year. And what that's saying is that people don't want two-year bonds right now, 2-year treasury notes. They're not attracted. It's complicated because while dollars are very, very strong right now, the market is kind of saying, we've got inflation up at 8%. I can lock in my money for 2 years and get 4% per year or 4.2% per year. But the problem with that is that inflation is still at 8%, and I'm technically losing money. The real rate becomes negative. So rather than locking in 4% per year for 2 years, the market's saying, I would rather have my money because I'm worried about a recession. I'm worried about what I might need this money for. And I also think that there's going to be, or the market's saying that it thinks that there's going to be buying opportunities. Why would I lock in my money at a negative yield, right? When you take into account 8% inflation, when I could potentially buy houses or real estate, or houses, real estate, same thing, real estate or crypto or equities or literally anything that's crashing in the future. So it becomes unattractive to lock in this rate. And when it becomes unattractive because of high inflation, the rate just keeps moving up because there's no demand for these bonds at the moment. Okay, and so that's kind of, go ahead.
Just to chime in, and if what people don't understand, some people is, this is how the U.S. government raises money, is through bonds. This is how they pay their debts. This is how they run the government, part of it, along with taxes, obviously. But if people are afraid to put it into what a lot of people call the safest place to put your money in the world, if people would rather hold on to cash than do that, there's bigger problems here that we could possibly see. So just my 2 cents.
Yeah, and I believe if you're a financial advisor, I'm not a financial advisor, but if you are a financial advisor, I believe that legally the only investment that you can actually call risk-free is the U.S. Treasury bonds.
Yes.
Right. So those are like the only that you're legally allowed to say this is a risk-free investment. Well, the problem is this risk-free investment right now is being outpaced by inflation. Now, for whatever, when I try to go and put on the U.S. inflation rate, I'll try it one last time. I was trying before I jumped on the stream here on a new price scale. There we go. We can get the inflation rate here. And I'm going to zoom out to like the weekly chart here. And we're looking at crude oil. I think crude oil in general, just energy in general, but specifically oil, is one of the most important indicators to be looking at right now. Historically, very correlated with inflation. Right, you see these big spikes in inflation, and it's actually a leading indicator for inflation, because oftentimes the inflation numbers that we get are laggard. Right, we're getting these oil prices real time, but CPI is measured year over year, but the data comes out on a month-to-month basis. So very often, oil can be a really good indicator for inflation, right? It's hard to argue that they're not correlated, because part of the CPI calculation or inflation calculation is actually oil, right? If we go to CPI and I've got the wrong website. CPI data, not CPI date. There we go. Consumer Price Index summary. You can see energy, commodities, gasoline, and fuel oil. Right? These are literally It's literally part of the equation for CPI. Right? So they are definitionally, undeniably correlated, because if the price of oil goes up, CPI goes up. Hence, inflation goes up. So they are 100%, or not 100% correlated, but they are correlated to some degree with 100%.
Not to mention that the out of all of the basket of goods that it's measured there, that has the most volatility. You're not seeing big price swings in homes and food. Not in the same way that you have gas go up $2-3 in the summertime, for example. So.
Right. Yeah, exactly. And look, what's been going on right now is, or what I want to kind of drive home the point is, we can kind of use oil as a leading indicator for inflation. And it's not perfect, right? If you see the last month's consumer price index, we knew oil was falling. Right, but we still came in basically flat month over month, 0.1% increase in August in all categories taken in, because oil went down, but it has not yet affected these other categories yet. There's a laggard effect, right? Lower oil prices take some time to seep into the other stuff. Just like we saw a laggard effect when oil prices were spiking back in February and March, right? There's a laggard effect where it doesn't immediately raise the price of food, but it does cause those larger increases in food later on, because, in all other categories later on. So right now we're seeing prices plummet, right? Which would indicate that CPI, or that the inflation rate should be coming down. There's really, between the most recent rate hikes and oil prices coming down, there's really no reason that inflation should not have peaked here, at least temporarily. We would expect that this is going to come down. And if I throw on my drawings here, I'll zoom in a little bit further. You see how CPI is measured year over year. Well, in September, if I throw on this moving average, right, in September, we've already started to see oil start coming down, I believe another 2.7%, and now it's crashing even further, right? So this moving average is going to go down again year over year, right? So these CPI numbers are about to start coming in very, in my opinion, there's a high likelihood that CPI starts coming in very favorable, showing that inflation is coming down. What I'm afraid of is basically a false positive, right? A red herring. What I'm worried about is the fact that these oil prices are largely artificially suppressed by the draining of the strategic oil reserve. There we go. Oh, sorry. Strategic petroleum reserve. I believe. I had such a good chart. Give me 1 second to pull this up. Chart. Go. Boom. Graph. Look at the strategic petroleum reserve. It's just been plummeting. pulling, and this data is only going through June of 2022. They've probably been draining it even further throughout the last 3 months. Q3, we're going to get Q3 data soon that'll probably show that the Strategic Petroleum Reserve has dumped off even further, pulled even more stock out of it.
Forrest, that's
oh, go ahead.
I just your personal opinion. If midterms or any sort of election wasn't around the corner, would they have drawn from that reserve?
No, probably
I don't
not.
think so.
Maybe just a little bit to pull like where's the, so I don't know why this isn't pulling for like month annual. There we go. There was such a better chart that showed it a little bit better. Crude oil. There we go. There it is. This is the chart. Shows you that this is the fastest and hardest drawdown we've ever seen, right? Yeah. So I don't think that posturing for an election is an emergency, right? This is supposed to be for emergencies or strategic. I guess it is being used strategically, but we've never seen a drawdown like this before, even in periods of really high gas prices. This is posturing for the election, and what I'm worried about is a potential black swan, or maybe not even a black swan, but basically whiplash, where we know the Fed has been really off base. They were very slow to react to inflation. They called it transitory. They didn't get on it until, really January, right? But then they've been kind of slow about it, and we've seen it kind of stagnate up here at the top. What I'm worried about is inflation is going to start peaking and coming down, and the Fed's going to pivot, which will be great for risk assets. We'll start seeing investments do really, really well. But what happens when oil prices and energy prices skyrocket again? What I'm most concerned about is this. This is crude oil, the same exact chart on the monthly, but normalized for the M2 money supply. And you can see we're actually very low. As expensive as gas seems right now at the pump, and it's been more expensive, but it's like in the threes, $3 and change per gallon here in Georgia. Look, I mean, there's room for this to move up. When you normalize for the money supply, we're actually at very near historical lows. We haven't spent a ton of time below these levels. And that's scary when you take into account the fact that oil prices are kind of prone to going up right now. Why? Because they're artificially suppressed, and because the administration that we have right now is not fossil fuel friendly. They are not fossil fuel friendly one bit. They revoked the approval for the Keystone Pipeline, among other things that they've done to kind of get in the way of oil production due to a renewable energy or a clean energy narrative. And I'm not here to be political or anything like that. But what I can tell you is that by 2050, and this is from this same website, EIA, a U.S. Energy Information Administration. They only expect, and I know oil is different than electricity, but they only expect, I believe, 44% of our electricity in the year 2050 to be renewable energy. And we're at 21% right now. So it's going to a little bit more than double in the next 28 years, 28 years. So what I'm saying is you can't just flip the switch and just say, electric cars are now required. You can't just flip the switch and hope that oil prices aren't going to skyrocket and that demand is just going to completely go away. And what I'm worried about is, we are going into a period of lower demand, right, in the winter. Is historically lower demand for oil. People drive a little bit less. But I am worried that if we see oil prices go back up, that's going to drive inflation up. And that's, the Fed can hike rates all they want, but they're almost two different battles. You have, energy prices that are, you can try to curb demand for energy all you want, but at the end of the day, a large part of the prices that are driving inflation, obviously the amount of money that they printed does not help because that affects demand. But the other side of the equation is supply. Right. And if we do not increase the supply or the production of oil or energy, and we see oil and energy prices go up, The Fed doesn't have much control over that. That's the government. That's the current administration's issue to deal with, is the supply side of the equation when it comes to energy policy and energy prices. And right now, we're not working towards energy independence, which is alarming to me, because I do think it could cause a black swan event. The black swan event being inflation getting out of control due to high energy prices. And yeah, if I look at any one variable, obviously interest rates and the Fed rate hikes are playing a large role in why the markets are down. But if I look at any one variable and say, what is the most risky variable that could come in like a wrecking ball and shake up the entire market and cause a black swan event, cause inflation to rise again, prices to rise again, despite an aggressive hawkish Fed, that's energy prices, particularly oil. But we've also seen natural gas prices go skyrocket in Europe. We're already seeing the cracks begin to form. The situation in Russia and Ukraine is not favorable to low energy prices. It's going to put strain on energy prices and make them more prone to going up. So personally, I'm hedging into energy, some energy ETFs. We'll be looking to pick up some oil, and I hate that. I have no interest in investing in energy. Crypto is what's exciting to me. So kind of annoyed that I feel the need to hedge into energy, but it is what it is. I'm not a financial advisor. I don't recommend that anybody else do what I do. But I think there's a very large risk of energy prices going up, and if they do go up, they could really wreak havoc on the rest of the market. The last thing I'll say, this is not to FUD Bitcoin, because I think if Bitcoin goes down in price, everything goes down in price. But Bitcoin going down in price, energy going up in price, particularly electricity, would be very bad for Bitcoin's price. We had earlier today, a mining company went out of business. So basically what happens is you have, demand for Bitcoin, or Bitcoin's price going down in a bear market, or demand for risk assets, whatever you want to call it, recession. The price of Bitcoin's going down, right? Meanwhile, you have energy prices going up. Once this crosses equilibrium and goes into this territory over here, you have this gap of, rigs and miners having to shut down their rigs. And that decreases hash rate, and overall is not a great look for Bitcoin in the short term. And it's not good for the price of Bitcoin, likely. So again, not trying to FUD Bitcoin. I'm just trying to be a realist here. Look, if this happens, energy prices go up, particularly electricity, Bitcoin's potentially in a little bit of trouble. And if Bitcoin's in a little bit of trouble, so is Ethereum, so is Solana, so is the rest of the market. Now you could get into speculation on maybe proof of stake cryptocurrencies could fare a little bit better than proof of work cryptocurrencies, but at the end of the day, they have a high degree of correlation. So this is more so what I'm worried about. High energy, basically, high energy is bad, negatively correlated with Bitcoin's price. When I was at Token Metrics, we had an analyst who did a report that showed that actually oil prices, not just electricity prices, but oil prices are actually negatively correlated with Bitcoin. So when oil goes up, it's usually bad for Bitcoin. When oil goes down, it's usually good for Bitcoin, believe it or not. So essentially what I'm saying is I think energy's the right hedge here. There's risk here. There's risk here in not necessarily wanting to be super exposed to crypto. If oil prices go up, drives inflation up, or on the other side of things, if electricity prices like coal and natural gas prices go up, that's going to hurt Bitcoin miners and put negative pressure on Bitcoin's price. So hate to paint such a bearish negative picture today. The last thing I will show you on a positive note is, hey, we are seeing a little bit of bullish divergence on the daily chart for Bitcoin. Bulls are trying to defend this demand zone for Bitcoin, despite the fact that the S&P 500 is down 2.7% today. Bitcoin only down 3.6%. The strength of buyers. The buyers have been coming in this zone historically, and they seem to be continuing to do so. Despite us challenging this zone once again. So that is the reason I'm not, panic buttoning, I'm not panicking ever in it for the long term, but I'm not super, super bearish on crypto. Like, I'm not worried yet about like a trip down to 15, 16, 17K, just because we're starting to see this bullish divergence, and I want to see how this plays out. I do think that we, 15, 16, 17K, all on the table. Of course, we're very close, but we do have this bullish divergence that is a positive sign for the short term, for the next week or two. And I do think those more positive CPI numbers are going to be starting to come in on October 13th, which could shift the market back upwards. It's a matter of how much damage is done to this market before those good CPI numbers start coming in roughly 20 days or so.
Boris, you're an absolute freaking monster, bro. You know what I love about your analysis is you pull up charts and you don't just look at price action and look at patterns. You put context to it, and you give your opinion, and you say, hey, this is down, but I'm doing this. Like the whole hedging against Bitcoin with energy ETFs, I don't think I've heard anyone talk about that. And so, your stuff is
to expand on the Bitcoin narrative, or the Bitcoin kind of discussion there. There is here. I actually have a chart here. Taking a look at this. So this is the Bitcoin difficulty. So as you have converging influences here, you have the cost to mine a Bitcoin at 32 terahashes right now, all-time high. The miners are producing less Bitcoin with the same amount of hash rate. This is essentially what it translates to. And I mean, if you look at where the price was in July of 2021, and then you look at the price of Bitcoin back in July of 2021. I mean, you had a $30,000 Bitcoin, and the difficulty was 3 times less than it is now. So it's 3 times harder to mine Bitcoin with half the price. Just to put it in perspective, how profitable it is to mine. And so you bring up the fact that we had a Bitcoin miner go file for bankruptcy. That's actually something we're going to discuss right afterwards. Why don't you pull it up? And then so we have if you guys aren't familiar, Compute North files for bankruptcy. So they filed for Chapter 11 bankruptcy. This is what Forrest was referencing here earlier. And they owe like $500 million to over 200 creditors. I think this is going to be more to come. I think this is maybe the first domino to fall on the large Bitcoin miners. Right now, energy cost is going up, as you said. We have the hash rate at all-time highs, and yet the price of Bitcoin keeps falling. And so you got to remember, these Bitcoin miners, these publicly traded companies, they are leveraging debt. They are borrowing to buy more ASICs.
The thing. And the ASICs getting more expensive.
The ASICs that they bought in the past were way more expensive because of the computer chips. Like right now, so if you leverage debt to buy these ASICs, they're way more, let's like look at the market now in graphics cards as an example. Graphics cards are a third of the price they were a year and a half ago. Same thing with ASICs, maybe not quite as dramatic, but ASICs are cheaper, so competition can get into the market at a lower price. The big boys that leverage, they're sitting on some expensive debt, and they're mining less Bitcoin. Hash rate it's a firestorm, and I think we're going to see more of this bankruptcy when it comes to miners, which I don't know what that'll look like for the price of Bitcoin, but
here's just to give it some just to give some context. Now, Compute North America, or Compute North, they're not a mining company like Marathon or Riot. They work with power providers in developing an intelligent grid that relieves congestion, promotes renewables, and strengthens the stability of local power markets. And they have 4 facilities just in the U.S. They have 2 in Texas, 1 in South Dakota, and Nebraska. And they're one of the largest data centers for miners. So even though they're not actually miners mining Bitcoin, they play a massively important role in the companies like Riot and Marathon, who are partnered with Compute North to mine Bitcoin. And so, no bueno.
Yeah, and when Bitcoin's price does start to come back, and you have all these mining companies that have raised debt and levered up to buy these to essentially mine Bitcoin.
Right.
What is their asset? They have Bitcoin. They're sitting on Bitcoin, and they're banking on it going up in price to pay back their debtors. So what are they going to have to do with that Bitcoin to pay back their debtors? They're going to have to sell it, which is not ideal. And again, I don't know exactly, I'm not an expert on Bitcoin mining companies. I don't know what exactly their cash flow process is. I don't know if they're, what their agreements are, and if they're able to set aside Bitcoin, or if they have to sell it right away for dollars and pay back, make payments on their loans or whatnot. But ultimately, if they're in debt, they're gonna have to pay that back, and only time they're gonna be able to pay it back is in a bull market. And that's more argument for the potential negative pressures on Bitcoin's price due to mining. So
That's
it's
actually
interesting. It's interesting.
That's a really good point. Is when Bitcoin starts getting into the 28, 30K, 32K, there's going to be so much sell pressure from these, like you said, these mining companies who spent all this money. They're going to have to pay those loans back. And so especially with it costing more money to borrow now because interest rates are higher, they're going to want to pay those off faster.
And if the miners who are essentially just sitting on a large reserve of Bitcoin waiting to dump on the market, I mean, you're going to have a massive price suppression anytime Bitcoin looks to break out, right?
Yeah. All right. Well, Forrest, we're a little selfish today. We kept you on for pretty much the whole show because we are about done here. We just value your insight so much and your expertise. Again, thank you so much for blessing us with your knowledge. We appreciate you as always, my friend. If you guys are not following Forrest on Twitter, what the hell is wrong with you? At 0xstacker, go follow him. Puts up amazing, insightful threads all the time. Also, if you are like charts, go sign up for Crypto Stackers Pro. The link to that is in the description of this video. Absolutely amazing metrics. I use it all the time to put in my trades. And finally, go subscribe to the Crypto Stackers Pro YouTube channel if you haven't already, which I'm assuming most of you have. If you haven't, what the hell? So Forrest, again, thank you so much, my friend. Have an absolutely amazing weekend, and we look forward to your video on Monday.
Sounds great. Thanks for having me on. It's always a pleasure.
Thanks, brother. Appreciate it.
Have a good weekend.
Also, want to give a shout out to Robert Salazar. Gave us a $2 super chat earlier. Thank you, my man. Said, I love Sin City. I hate Robin. Can't even say that. Said, Sin City Forest, you guys. All right. You know what? Before we sign off, Rob, I want to just one last thing. Let's touch on. Let's spend 2 minutes on this. All right. We have some news regarding Celsius and their newest revival plan.
Oh, I'm excited to hear this one.
They're going to be issuing new wrapped assets to trade on other platforms. And this middle part here, I word for word, I did not reword it. The idea is to funnel Celsius's remaining funds allocated to repaying customers into wallets, then issue wrap tokens known as CX tokens to represent the ratio of how much the firm owes to how much it has on hand. Customers can redeem their wrap tokens immediately or wait for a larger payout. Now, Robin, I'm giving you the floor here, my friend. Take it away because I got nothing nice to say.
All right. So they're trying to turn their debt. They're trying to turn their debt into a new crypto. Yeah. That's what they're doing. They're like, all right, how much do we owe? All right. Let's wrap it up into an IOU, nice and pretty, and we'll just form a token. Yeah.
Round of applause for Celsius, guys.
Dude, like what kind of that is an amazing business plan. So what if we just raised a bunch of debt? Right. Hear me out here. What if we raised a bunch of debt, right, David? And then we bought a bunch of like really high-end cameras and stuff, maybe a new studio. And then instead of paying it back, we create a new we default on it.
Okay.
We create a Sin City crypto token, and then we issue out IOUs. And
when we make money in 5 years,
when it's worth something, we'll just have the tokens in your wallet,
dropping knowledge, baby.
Ready.
We are dropping alpha on how to start a business, guys.
That's it right there,
clowns,
man. Textbook finance right there, bro, dude. Like,
And on that note, we are done. But before we are done, big shout out to our main man, one of our main men. Brokioshi, our whale member, just gifted 5 memberships. Brokioshi, this community got to be the most giving community. I don't see this happening anywhere else. I mean, at the level it's happening now on our channel, this is amazing. We love you guys. So if you want a free membership, you have to allow the gifts. It's a notification that pops up on your chat. It says allow gifts. Press yes if you want, and you'll get a free month of members only stuff. Now, somebody had asked earlier, when's your next street interview? Guess what?
We'll be filming it on Saturday.
We are filming it tomorrow.
Yeah.
All right, so it's going to be exciting. Also, make sure follow us on all of our social medias. Twitter, Instagram, TikTok. All the links are in the description of this video, or they're on our link tree, which that link is in the link of this link of the link also. I know, a lot of links. Also, huge shout out to HP Blockchain. $10 says no IOUs here. Real money. We love it. Thank you guys so much for your support. Also, go join our Discord. The community ran Discord by our friend Marky Mark. He is the main admin on there. He talks as Sin City Crypto. So join us there. Also, if you want to be a member of the channel, you don't want to wait for anyone to gift you a membership, you can sign up through there as well. And check out our merch store.
Or if you got gifted membership and you want to upgrade,
you can do that as well.
There you go.
The only reason you would upgrade is to support the channel. Is Rob doing the interview? I don't know. What do you guys want? You guys want Robin to do the next one, or you want me to do the next one? I vote Robin. There's my vote. All right. Yes, Sheldon brought up CNFT. We will be at CNFT. That is October 7th and 8th. If you're in Vegas or if you're coming, let us know. We'd love to link up with you. Maybe go grab a drink, grab some food, whatever it is. We want to hang out with our community. So, all right. On that note, got anything else, Robin? Rocco? Friends, family, friends of family, and family of friends, we thank you so much for ending your week here with us at Sin City Crypto. Also, big shout out to our man Forrest from Crypto Stackers for joining us again. On behalf of myself, Robin, and the Don, we love you guys. Have an amazing weekend. We will see you 10:30 a.m. Las Vegas time on Monday. Until then, booze. Oh, Redman over here. Redman, email us at SinCityCrypto1, Gmail. SinCityCrypto1@gmail. Email us. Hey, no offense taken. I 100% agree. Robin is built for that stuff, man. He is way more. He's better than I am. I have zero issue admitting that. I had more fun watching his than but anyways, yes. Robin will be doing the next one. Have a good weekend. You have a good weekend too, Handy. Yeah, if anyone's coming to CNFT, email us, SinCityCrypto1@gmail. Love you guys. Have a good weekend.